That come up?
Yeah.
Yeah?
Yeah.
Okay, doke. So let's go. Yeah. So within this presentation, we'll just talk through obviously More2Life, how the market is changing. So it has changed over the past few years, which I know a lot will be familiar with. So how the market's changing, what is driving that change, and also then what products we can help support different customers. I've recently moved into the role of telephone BDM, so I'll be looking after all the have a telephone account manager. So we'll just get that confirmed. You probably speak to them already, but I'll be able to just share details, my contact details, telephone account manager's details. And then with being part of our self-select proposition, you'll also have a case owner. So that'll be the direct member of the team who works with your offers to get them through to completion. Got a direct contact with them. So if you need any support, any inquiries, or any updates on an offer, they can get directly onto an Axe portal. So I will get all three of our contacts over to yourselves. So if we have a look just at these slides here, so we are one of the most trusted lifetime mortgage lenders. We started out as a challenger brand, and we've now got the widest range of products in the market. Because of everything that has changed, More2Life knew that we needed to be innovative, bringing agility just to help bring the best possible range of products that we could to the market to support different customers' needs. So what is driving the change? We are seeing customers using more of the housing wealth to unlock the cash that they need. We've got renewed regulatory focus, so that is where the FCA in their discussion paper have said that they don't want lifetime mortgages just to be viewed as a niche product. If there's somebody who's over the age of 55, going to their mortgage advisor to look at a different option, are they being told that equity release could be an option for them? And then they might want to write it themselves or refer it on to a specialist who can write a lifetime mortgage. We've got legislative changes, so that'll be from April next year, where pensions will form part of people's estates. The change in market and how the customer demographic is changing too. So with everything that's going on in the background, there really is a need for more holistic advice. With higher interest rates, some of you might be aware that we offer a lot of interest reward products. So in order to see those products within the market or on your sourcing results, you need to put in how much a customer is comfortable paying. We see that still only 17% of advisors are sourcing with those fields, and ultimately if you did put in how much they're comfortable paying, i.e. £300 a month, it wouldn't remove any lender or any product from your sourcing results. It should, at the top of the sourcing, include us with, say, flexi interest reward or horizon interest reward, with cheaper rates, better rates, and then a lower overall cost of borrowing. And I can obviously, if anyone's got any questions on those products or would like a bit of time set aside, happy to do that. So in terms of the customers and how their demographic is changing, we can see here that customers aged between 55 and 60 were the highest portion of lifetime mortgage customers in 2024, just over 17,000. 60 to 65-year-olds were just over 9,000 taking a lifetime mortgage. 65 to 70 were just over 4.5, and 70 plus just under 5,000. So it just shows in recent years how many younger people are looking at a lifetime mortgage to help support their goals. So your traditional equity release customer, that would be somebody who's fully benefited from house price growth. We see them as asset rich and cash poor. They probably repaid their mortgage in full, and they'll be looking to release the funds to gift, go on nice holidays, more of your aspirational needs. But what we're seeing more of, again, just tailing back to those younger customers, the emerging lifetime customer is somebody who hasn't benefited from the house price growth. They might have bought a property later on or upgraded it partway through their life. They'll still be working. So they're going into retirement, still working, still paying the mortgage, and they're just looking to find something that's a bit more comfortable for them. And this graph here just sort of shows that journey. So you've got your traditional lifetime customer who has repaid the mortgage fairly young, and then later in life, when they can look at a lifetime mortgage, they might be doing that to go on holidays just to fund their retirement a bit better. But now we're seeing these younger customers, we've got longer. So it's taking us into retirement age, and that gap is being bridged by later life lending. And, we are here to try and support that. Oh, I've gone too far, sorry. So with changing customers, housing wealth becoming the central role of what customers unlock the funds, rising legislative changes and sharper focus from the FCA, later life lending has moved from niche to mainstream. And that's where we can come in. We've got tools, products, and the support from ourselves just to try and help you deliver those best outcomes. We've got the widest range, said earlier. We'll have a look through our core products and then what we've done just to build on those. So in 2016, when we started Flexi, that was our flagship product. And over the course of 6 years, so, that's why we're sourcing to find the best product and us just to guide you in terms of lending criteria. Then at the end of 2022 is when we saw the mini budget. So interest rates went really high, LTVs were reduced. And then what we'd found in 2023, there was a bit of a gap. Following that, this is where the innovation began. So Maxi Zero, the only no ERC product in the market. So if you ever get a customer who in the next few years knows that their circumstances would change, that might be they know they're going to get an inheritance. It could be that they're planning on selling a business or another property. This product doesn't have any ERC, so it's offering that flexibility to customers. All these IR products are our interest reward range. So they all offer something a little bit different. Horizon, a lot of you will be familiar with in terms of how easy it is to explain. A customer can pay a set percentage of their interest over a set term. It gives them a reduced rate. And if they make those payments for the term that they've agreed, they'll keep that reduced rate for life. So it's very black and white. With Flexi Interest Reward, it's the same outcome for the customers. So if they make payments, they will get a reduced rate, but it isn't based on a set percentage or a set term. You've got to rely on the sourcing with it being from a pricing engine. So if you put in how much they're comfortable paying, Flexi will tailor it exactly to your customer's needs. If it's available, it might say that they only need to pay X amount over a bespoke term. And again, if the customer makes those payments and sticks to them, they'll keep that reduced rate for life. Just a quick look at how Flexi Interest Reward has helped a couple that had a lifetime mortgage with us. We had a 68 and a 70-year-old. They were still working, but had plans to either stop working or reduce their hours. And they were coming to the end of their interest-only mortgage, paying £645 a month. So after speaking to an advisor, they were able to take a flexi interest reward lifetime mortgage, which cleared, they could repay the lender, and then they chose to pay £100 a month over 7 years, which would have given them a better rate. It's reduced the monthly payments, it's got the lender off the back, and then they'll keep that rate for life then. All of our products have got the core 4 features. So if somebody cannot or does not want to commit to payments, all of our core plans have the option for customers to make partial repayments. Majority of the plans, it's 10%. We've got one product, Maxi, which will allow 12%, and then Omni is market leading with a 15% optional payment allowance. Every product has fixed ERCs, and we find that that is something that advisors do like to offer a customer. It's very black and white. You know, in year 5, your early repayment charge might be set at 3%. So it's all specified on each KFI. Shortest ERC is obviously the Maxi Zero plan, and then our longest ERC product is Flexi, which the ERCs are on for 10 years. All the products have the downsizing protection. Some of them only kick in once they've had the lifetime mortgage for 3 years or 5 years. But we do have one plan, Horizon, where downsizing protection is available from day one. So we cover all areas there. And then your ERC exemption is where, you know, if you've got a joint application, one of the customers unfortunately passes away or goes into long-term care, the applicant still in the property can choose to redeem that mortgage. Some of the plans will do it within say they can do it in a 3-year window, and we've got another product where it is unrestricted. So there's lots of flexibility to offer customers. Just having a look at this market map, you can see here from low LTVs right the way up to the highest end of the market. And in terms of interest rates, going all the way up to the Omni product, we should have a product option for customers looking to achieve all different types of outcomes or loan amounts that are required. So Horizon covers a huge scope here. And then we go up to Maxi, which is sort of mid to high LTVs. Apex just floating around again, mid to high. And then we do have Omni, which is in most cases the highest LTVs in the market. So if your customer is looking for, you know, if they're rate conscious, rate sensitive, the options we could have would be Flexi, Horizon, or servicing the interest to get a reduced rate. If somebody needs a higher LTV, we've got Apex and Omni to support those customers. If somebody can make a regular payment, we've got the interest reward and Maxi Zero. There is no criteria around repayments on Maxi Zero with it not having an ERC on there. And 3 years, and Omni's set at 6. And there we'd have some time for questions. I suppose if anybody did have anything to ask, you can always drop me an email or give me a call. So I'm just going to have a look at some customer vulnerability on our application form. So can you see that still, guys?
Yes.
Yes.
It's changed over.
Sorry, I have one quick question. Do you know the Horizon product?
Yeah.
Do you find that's actually probably one of the most popular products?
Yeah, I would say so.
And the reason I ask that is obviously because when I'm actually checking pre-applications for advisors and they do submit business or want to submit the business to More2Life, a lot of the ESAs I see are Horizon products. So I was
Yeah.
just wondering, of course, does it actually the criteria does it actually meet a lot more than, for example, the Omni product?
Yeah, so I think with Horizon, it's very competitive in sourcing. So if, I don't think all customers need max loan to value. In those circumstances, they would be tailored to an Omni plan. But for sort of your low to mid LTVs, it offers a drawdown as well, and the features are really flexible in the market. If it's not market leading, obviously things change. It's never far behind. It's just done really well since it was launched a few years ago. Lending criteria's quite fair. So yeah, I think we do get a lot of applications in for the Horizon plan, just with its competitive rate.
Okay, no, that's great. And I just got one question around the fair value assessment as well. So, obviously, off the top of my mind, I can't remember whether I've actually seen one from More2Life or not. But in terms of a fair value assessment for the product, is it tailored according to each product, or is it a generic fair value assessment that More2Life like to actually work across their products? So, from a consumer duty point, advisors can actually specify to their customers, their clients, that okay, well, More2Life are offering you a fair product, valued product because of X, Y, and Z, or does it tailor according to
So we'd have to probably get those internally. My understanding that it would be tailored to each product because with them all offering different features and Omni is so high up in LTVs with a higher rate, I would have thought that they were tailored to each product because they do vary for what they offer.
okay, no, that's
I'll
great.
have to get that clarified, Simon.
No, that's great. And
If
just one final question, of course. I know I've actually rabbited on a little bit, but around
No,
the
it's
kind
fine.
of products you guys offer, obviously, because I know you mentioned obviously More2Life do actually offer quite a few different products, obviously probably more than most. In terms of later life lending, is it predominantly only lifetime mortgages, or do they
Yeah.
look at retirement interest only as well, or any others that might actually appeal more to the later life?
Or only lifetime mortgages, so just equity release
Right,
products we can
okay.
offer. Yeah.
Okay, no, that's just fine. Okay, that that
Thanks,
that was
Simon.
it for myself. Thank you.
Thank you. So in terms of customer vulnerabilities, if you do your appointments face to face with or over the telephone and you identify that a customer may be vulnerable, you can let us know as part of the application form. So there was a survey done by the FCA, and they've said that over 50% of people have some sort of vulnerability. It's not always obvious what we might think makes somebody vulnerable, maybe a disability. So if you identify that somebody does have a vulnerability, you can log it on our application form. And what that does, that then helps us support the customer in the best way that we possibly can. So I've just taken these screenshots from the application forms. It's going to be the same for every product, whether you're offering Horizon, Maxi, Omni. This is identical to each product on the form. So you can fill in if it's a power of attorney. It's only basic information that we need on the application form. If the case does come in and you submit it, once the underwriters are reviewing it, they will ask for the full document. It needs to be the full. I think they're normally about 15 pages long, and each page is to be certified, but the underwriters would explain that as they're requesting it. So for the app form, basic details, part of the underwriting process, we need everything. And then in terms of vulnerabilities, we've highlighted your type and then a subtype as well. So you've got your physical disabilities, long-term illnesses, hearing or visual impairments, mental health, low mental capacity or cognitive disabilities. Even life events can make someone, class them as vulnerable. So you can see here if it's income, relationships, and then there's more down here. So lower erratic income, low savings, just to bring out a few, lack of support structure. It could be poor literacy and numeracy skills, low English language skills. I know I've seen a case where we've had to get extra support in. And then you've got others down here. So there is somewhere to market. I would always highlight if a customer's got a vulnerability, it will flag it on the case so that we know internally. And then it will go through our vulnerability team. They may come back and ask you, the advisor, more questions on that. But as we are regulated by the FCA, we just want to make sure that everybody is aware and everyone's done what they need to do. So you will get asked more questions on an email. You can just answer and reply to those. If a customer isn't marked or we're not informed that they are vulnerable and the solicitors identify that they are, the solicitors would then let us know. Did you want to jump in, Simon?
Sorry, just one question around the low English language skills. So, for example, if a advisor was to actually speak to somebody whose level of English wasn't quite good, but
Yeah.
they could actually make a decision and it was clear and evident they knew exactly what was going on. But in terms of reading materials from More2Life, do you actually have any materials that you could send to customers? For example, an thesis that could be in a different language. For example, it could be in Mandarin, or it could be in Urdu, or it could be in anything else. So that, of course, in terms of More2Life's point of view, it matches the advice that's been provided already.
Yeah, so I'm not sure if we can get the KFIs, because it'd be the KFI and the offer that would be only really the reading material that a customer would see. But I know in the past I'd been familiar with a case where the customer didn't have good English, and I think it was down to the solicitor to bring in a translator, so that was able to help. But it was through the solicitor where that was done. So it might also be for a solicitor might be able to translate it. But we did have a translator on one case that was able to help the case proceed, and it did go through.
Okay. And would that be the same for people who might be visually impaired, so large and bold print or
Yeah,
braille?
we can do that. Yeah,
Yeah.
yeah. So yeah, the solicitors can identify and let us know if it hadn't been picked up earlier. And one of the reasons it's good for us to know is obviously so we can support them through the process, i.e., changing the font or the size of the font if we need to. But also then once the case is completed, and if that customer has a drawdown, it's the customer that would contact us, or the power of attorney if they've got one, but the customer would contact us. So if we are aware that they have some sort of vulnerability, we can do our best sort of just to manage their expectations, maybe talk them through the process differently, just offer whatever tailored support they may need. So please do always make us aware. Is there any more questions, Simon, on that? Or if anybody from the recording, you could always get in touch.
No, I'm perfect. Thanks. You've actually answered all my questions. So apologies
Thank
for
you.
butting in so many times.
No, it's good. Thank you. So that's it from me, guys. I will get an email over, like I said, with my details, telephone account manager and your case owner. So, as we hopefully continue and work together more, you'll know who your points of contact are, and we will do our best to support.
Great stuff. Thanks, Hayley. Really appreciate you doing the webinar, even though not many turned up, but thank you anyway.
Thanks,
Thank you,
Haley.
guys. All right.
Thanks. Thank
I'll
you.
speak to
Bye-bye
you
now.
soon. Take care.
Thanks.
Thanks.
Bye-bye.
Bye.
Bye-bye. Bye-bye.
Bye.
Bye.